Good morning. Welcome to Morning Call. I'm Lata Venkatesh. With me are Sonia Shenoy and Anuj Singhal. Blues. Well, I'm not in any specific color, but it looks like the handover from US and from Asia at least looks positive at this point in time. Some home builder index is at the best level since 2005. In China, they've reported higher home prices for the third consecutive month. June was better than May, July was better than June, and such like. So 3 months in a row, good home prices. But the reports also caution us that they are still 4% lower than year-ago levels. So it's a very nascent recovery. Nevertheless, the mix of data that we have got overnight is better than where we thought the economy, the global economies were yesterday. So to that extent, there's green on the screen. We had buy numbers in FIs and DIIs. So looks like yesterday's fall may yet be stemmed, at least in the early hours of trade. We will have to really watch and see how much more legs the PSU Bank rally has. Going by the delivery-based buying, it looks like it could have a little more.
Oh yes, especially in select PSU banks like Bank of Baroda,
actually.
Yes, and SBI. There was quite a bit of delivery-based buying over there. And as you pointed out, the global cues are positive, not just the US markets, but even crude. That continues to fall. So now Brent is below $49 a barrel. I mean, okay, that's positive for us in the longer run. But yes, for the global economy, it indicates that, you know, demand is slowing down, etc. But the Japanese economy has also contracted. Its GDP has contracted about 1.5%. So that's another point to worry about. Not just China, but even Japan is slowing down. But yes, for our own markets, there was big delivery-based buying seen in select PSU banks. So whether it was Bank of Baroda, there was, 400 crores of delivery-based buying. There was 300 crores in SBI. So these are a couple of stocks that will remain in the news. But Anuj, hi, morning. The flows have not been that great. I mean, you know, FIs have bought about 140 crores. Apart from the banking stocks, which we spoke about yesterday as well, the rest of the market has been, slightly choppy on the downside.
Morning, Sonia. You know, you'll remember we were talking about it in closing bell, and I told you that, you know, despite the big negative tick for the market, don't expect a large FI sell number. Look, this is a market which is lacking triggers to break out of range. This is essentially a range bound market, 8,300 to 8,600. Within that, you'll go through periods when it will look like, wow, you know, the market is breaking out, or, you know, whether it was a false breakout or false breakdown. You'll hear all sort of things, but essentially we are still in the range. The good thing about yesterday's trade was that the overall market lacks delivery-based buying or selling, but of course there was buying in PSU banks, Bank of Baroda and SBI, so that re-rating may just continue. I think what's happening in this market right now is that it's not a cash-driven market, it's an F&O-driven market. And in that F&O-driven market, I think the data is extremely positive. The way to play this market right now is that you have now a well-defined trading range, 8,300 to 8,600. Every time the Nifty is going towards support level, you should go out and buy the market. And every time it's going towards the higher end of the range, you should sell this market. With your stop losses intact, with the band of 8,300 to 8,600. If either of those two marks are taken out, the market has a trend. Otherwise, play for ranges. You know, yesterday if someone would have taken long position, you'll get rewarded today. For example, if you would have taken short positions a day before, you would have been rewarded first thing in the morning yesterday. So I'm looking at the F&O data. What's really interesting is the selling in index futures, but that's because open interest is down. FI sold about 600 crores in index futures, but my sense is that a lot of that would have taken place yesterday when the market was down 100 points first thing in the morning. So a lot of weak bulls would have been taken out. That's always a positive sign. You know, F&O data sometimes has to be taken into, has to be looked at as a contra data. So what's happening right now is yesterday there was a lot of unwinding of long positions, which is actually a healthy sign for the market. If you take a look at what happened in the index options, FIs unwound 29,000 index longs and added 8,000 index shorts. Again, a good sign for the market because the market is hedged now. You know, short positions always help market if there's a bit of a recovery or a bit of a rally in the market. And I'm looking at the calls data. There was buying of 3 index calls for every 1 index put. Again, a positive data. So overall, my sense is that this is a market which overall looks positive, at least for the day. But this is a market in which you play only by the day. The only other trade that stands out in this market is that the rupee depreciation. That's really the big story, and that's reflected in the way CNX Pharma and CNX IT are shaping up. CNX Pharma is up 6% this month. CNX IT is up 3.5% this month. TCS is up 7%. Infosys is up 6%. So if there's one trade which is playing out for you, it's the rupee trade. And it looks like this trade has more legs to it, because clearly this doesn't look like 1 or 2 day phenomena. So that's one space which is going to remain active, and that's one space where you can still take positional calls. For the rest of the market, you can't take positional calls. For example, take a look at Reliance. That's all of a sudden down 5% this month. Larsen and Toubro has not given you any trend. The only stocks that have given you trend have been pharma stocks and IT stocks. And that's, if you want to take large positions, these are the stocks to be in. If you want to take market position, you have to be chameleon, not a bull or a bear. You have to change your color every day depending on what the screen looks like.
Yeah, the rupee depreciation really has come out of nowhere. And what is perhaps likely to give it legs is this expectation that the Fed might hike. There is an increase in the number of voices that are telling you that. And what gave it unexpected legs day before yesterday was the trade data. In this grand banking reforms press conference that went on for hours on end, nobody noticed that the trade data actually showed a higher deficit. And it showed a very powerful increase in non-oil imports. Oil imports rose, gold imports rose, but engineering imports also rose, which could be a nascent recovery. It's good for the economy. But nevertheless, it will cast pressure on the rupee itself, which is why you saw the depreciation yesterday as well. Normally, it would have gotten restricted because the yuan devaluation story had played out. That is what had triggered the rupee depreciation. The fact that it got some legs yesterday was because, the trade data distinctly came out of the blue. Nobody was prepared for that $12 billion plus kind of trade deficit. And the trends that indicated that deficit indicated that they had more to play. You could have, if this is a nascent capex recovery, then you would have more engineering imports that could flow in even in the current month. So there could be legs, but today is a holiday.
Yes,
it's
money markets
trading
are not
holiday
trading.
on account of Parsi New Year's, and therefore today we may not get too many cues. But I'm not very sure there's too much to play over there. Fundamentally, if crude is going down, as Sonia began her conversation with, there is just a little bit more, but not a great deal more for the rupee trade to play. Whether there is more for the IT trade to play because of the, Infosys con call details and other reasons, that's a different story. Yes. But rupee can give you only this much, not too much more.
True.
All right, yes, and we forgot to start off the show by wishing all our Parsi viewers a very happy New Year. So it is a holiday for many, but not for us. But here's what you'll get to see on the show this morning. It was a shaky start of the week yesterday with the Nifty closing below the 8,500 mark. Is the weakness here to stay? We'll ask our market master for the day, Gautam Chowcharia of UBS Securities. In one of the most talked about announcements recently, Usha Ananthasubramaniam has taken over as the Managing Director and CEO of Punjab National Bank. We'll speak with her whether she can solve the NPA problems of the bank and lead it on the road to recovery. This is her first interview after becoming the MD and CEO of Punjab National Bank. Amish Rathi will also join in for a curtain raiser to the Anand Rathi Emerging India Conference that kickstarts today. And from the FMCG space, Emami has been one stock that has been hitting new highs after reporting a blockbuster set of earnings this quarter. Anuj Bhansali of the Emami Group will join in to tell us what the road ahead will look like. All right, so those are all the top headlines, or rather top events that we're going to track later today. But before that, let's tell you about the US markets. It was a good day of trade yesterday. So the Dow has now risen for the third straight session, and the home builders confidence data has risen to the highest in a decade. That's what actually kept the market momentum going. Here are more highlights.